Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind those dusty financial reports. Today we are diving into a rather interesting filing from Defiance ETFs, and let me tell you, they've got some complex strategies cooking that might make your head spin if you are not careful. Think leverage bets on everything from volatility itself to individual tech stocks. It is a wild ride and we're going to break down what it all means for investors. And before we jump in, if you enjoy getting these corporate secrets laid bare in super simple terms, make sure you are subscribed. We're building a community of smart investors who want to understand the real story behind the numbers. Plus, we have a Discord community linked in the description below where we break down these filings even further. Come join the conversation. Alright, so what we're looking at here is a certified semi-annual shareholder report from Tidal Trust II, which is essentially a holding company for various Defiance ETFs. Think of it like a parent company with several specialized investment funds underneath. This report is for the period ending the 30th of September 2025. Giving us a snapshot of their performance and holdings. First up, let's talk about the Defiance Enhanced Long Vol ETF, ticker VIXI. This fund is all about trying to profit from market volatility, which can be a bit of a wild west. They've got a strategy that involves options and futures contracts, and as of the 30th of September, their total net assets were around $3.37 million. They had 9 holdings, and get this, their portfolio turnover rate was 0%. Meaning they weren't actively trading much in that period. Looking at their investments, we see they had about 32.6% in US Treasury bills, which is a pretty safe bet. But then they also had some purchase put options, like on the S&P 500 index with an exercise price of $6,325. Now, these options cost them $80,400. Interestingly, they also had written call options on the S&P 500 index with a similar exercise price. And these contracts were worth a negative $196,740, meaning they lost money there. Essentially, they were betting on volatility in different directions, which is pretty much the name of the game for a volatility-focused fund. It is like they're putting money on both teams to win in different scenarios. They've also got a significant position in CBO volatility index futures. For example, they had 29 contracts expiring in October 2025, with a notional value of over $500,000. The value of these futures contracts showed an unrealized depreciation, meaning that as of the 30th of September, they were down over $85,000 on those particular contracts. Across all their futures, they had a net unrealized depreciation of about $130,402. When you combine all these derivative positions, their written options alone represented a negative 5.8% of their net assets. So, while they're aiming to profit from volatility, these derivative positions themselves carry a lot of risk and can lead to losses. Next, we shift gears to the Defiance Leveraged Long Plus Income AMD ETF, or AMDU. This fund is focused on advanced micro devices incorporated, aiming for long-term capital appreciation with a side of income. Their total net assets were around $911,000 with 6 holdings. Again, a 0% portfolio turnover rate. Their top holding was actually Advanced Micro Devices Incorporated Options, with an expiration in October 2025 and an exercise price of $120, making up 12.5% of their net assets. They also held us treasury bills and a money market fund from First American Government Obligations Fund. Here is where it gets interesting. They were writing call options on Advanced Micro Devices Incorporated themselves with an exercise price of $162.5. These written options had a notional amount of over $889,000, but resulted in a negative value of $14,245. This means they've taken on an obligation that is currently costing them money. Furthermore, they have total return swap contracts tied to Advanced Micro Devices Incorporated. These contracts are essentially bets on the performance of AMD stock. They have a swap with Cantor Fitzgerald and Company with a notional amount of over $1.3 million, which currently shows an unrealized depreciation of about $34,000. This suggests that AMD's stock price has moved in a direction that is unfavorable to this particular swap position. The total value of these swap contracts, including unrealized appreciation and depreciation, represents a significant portion of their net assets, and they are structured to provide leveraged exposure which amplifies both gains and losses. Now let's move to the Defiance Leveraged Long Plus Income Ethereum ETF, or ETHE. This fund is all about Ethereum. Their net assets were about $2.54 million with 7 holdings and that same 0% turnover. They've put a good chunk of their money into purchase call options on iShares Ethereum Trust ETF. One position with an expiration in October 2025 and an exercise price of $22 represents over $472,000 in notional value and is worth $143,250. They also hold us Treasury bills and that First American Government Obligations Fund. On the written options side, they had a call option on iShares Ethereum Trust ETF with an exercise price of $30.5. This contract with a notional amount of over $2.5 million is currently valued at negative $107,325. This illustrates the risk involved with writing options where you are essentially selling a right to someone else at a set price, and if the market moves against you, you can face significant losses. They are also using total return swap contracts related to iShares Ethereum Trust ETF. They have two swap agreements. One with Clear Street LLC has a maturity date in October 2026 and a notional amount of over $2.1 million, showing a small unrealized appreciation of $6,513. The other, with Merrick's Capital Markets Incorporated, matures in September 2028 with a notional amount of over $2.3 million and has no current unrealized appreciation or depreciation. These swap contracts provide leveraged exposure to Ethereum, and the use of derivatives like these can amplify returns but also magnify losses. Next, we have the Defiance Leveraged Long Plus Income HIMS ETF. Or HIMI, this fund focuses on Hims and Hers Health Incorporated. They had about $3.73 million in net assets, 8 holdings, and a 0% turnover rate. Their investments include purchase call options on Hims and Hers Health Inc. with exercise prices of $37 and $59. The $37 call option, with an expiration in October 2025, has a notional value of over $1.3 million and is currently worth $469,852. They've written call options on Hims and Hers Health Inc. with an exercise price of $55. This obligation has a notional value of over $3.6 million, but represents a current liability of $188,800. This means they've sold the right for someone else to buy Hims stock at $55. And currently, the market price has fallen below that point, making this option unprofitable for the buyer. But it represents a risk for Hims ETF if the stock price rebounds significantly. Then we come to their Hims and Hers Health Inc. swap contracts. They have 3 of these, with a total notional amount of over $7.1 million. These swaps are designed to give them leveraged exposure to Hims and Hers Health Inc. stock performance. The collective unrealized appreciation on these swaps is over $429,000. Indicating that the stock has performed favorably for these leverage positions overall. However, the significant financing rates on some of these swaps, like OBFR plus 40.00% on one of them, suggest substantial costs associated with maintaining this leveraged exposure. This is a critical point because high financing costs can eat away at potential gains. Moving on to the Defiance Leveraged Long Plus Income Hood ETF, ticker HOI. This one tracks Robinhood Markets Incorporated. Total net assets were about $1.99 million, 8 holdings, and again 0% turnover. Their investments include purchase call options on Robinhood Markets, Inc., with exercise prices of $90 and $155. The $90 call option, expiring in October 2025, has a notional value of over $529,000 and is currently worth $198,135. They also have a substantial amount in the First American Government Obligations Fund and US Treasury bills. In terms of written options, they've written a call option on Robinhood Markets, Inc. with an exercise price of $147. This has a notional value of negative $1.9 million and currently represents a liability of $25,043 for the fund. They are also heavily involved in Robinhood Markets, Inc. swap contracts, with a total notional amount exceeding $4.4 million. The collective unrealized appreciation on these swaps is a significant $563,724. This indicates strong positive performance from these leveraged bets on Robinhood stock. However, like with the HIMS ETF, the financing rates here are also quite high, which is a constant cost to maintain this leveraged exposure. Now for the Defiance Leveraged Long Plus Income MSTR ETF, ticker MST, this fund is linked to MicroStrategy Incorporated. This is a much larger fund with $73 million in net assets and 12 holdings. The expense ratio here is 2.21%, which is on the higher side. Their largest investments are in purchase call options on Strategy Incorporated, with a massive notional amount of over $22 million for the $200 exercise price option, and another over $71 million for the $315 exercise price option. These options alone represent 12% of their net assets and are currently valued at a combined $8.8 million. This shows a massive bet on MicroStrategy's stock price going up significantly. They also hold us treasury bills and money market funds. They've also written call options on Strategy Incorporated with an exercise price of $315. This represents a huge obligation for the fund, with a notional amount of over $71 million and currently valued at negative $2.47 million. This is a massive bet that MicroStrategy's stock price will not exceed $315. The premium received for writing these options was nearly $1.5 million, but the current mark-to-market value represents a significant potential liability. Their total return swap contracts tied to Strategy Incorporated are enormous, with a combined notional amount of over $146 million. The unrealized appreciation on these swaps is an impressive $6.65 million. This massive exposure to MicroStrategy, particularly through these swaps and options, is clearly the fund's primary strategy. However, the high financing rates on these swaps are a major concern, as they will constantly be working against overall returns, unless MicroStrategy's stock performs exceptionally well. The fact that they have such large positions in MicroStrategy call options and swaps with a massive notional value indicates a very strong conviction in the future performance of MicroStrategy's stock. Remember, MicroStrategy is heavily invested in Bitcoin, so indirectly these funds are also taking a very bullish stance on Bitcoin's future, even though they are not directly investing in it. This is a high-risk, high-reward strategy. Next, the Defiance Leveraged Long Plus Income PLT ETF. Ticker PLT, this one is all about Palantir Technologies Incorporated. Net assets are around $1.5 million with 7 holdings and a 0% turnover. They're holding purchase call options on Palantir Technologies Inc., with exercise prices of $130 and $190. The $130 call option expiring in October 2025 represents a notional value of over $310,000 and is currently worth $89,080. They also hold us treasury bills and that first American government obligations fund. As for written options, they have a call option on Palantir Technologies Inc. with an exercise price of $180. This contract has a notional value of negative $1.49 million and currently represents a liability of $41,205 for the fund. They also employ Palantir Technologies Inc. swap contracts, with a total notional amount of over $2.6 million. These swaps are currently showing an unrealized appreciation of $126,584, indicating a positive performance for these leveraged bets on Palantir. Finally, the Defiance Leveraged Long Plus Income SMCI ETF, ticker SMC. This fund focuses on Super Microcomputer Incorporated. They have $1.7 million in net assets, 9 holdings, and that same 0% turnover. Their investments include a huge chunk in purchase call options on Super Microcomputer Inc. with exercise prices of $32 and $54. The $32 call option expiring in October 2025 has a notional value of over $1 million and is currently valued at $335,475. They've got a significant portion in US Treasury bills and the first American government obligations fund as well. Regarding written options, they've written a call option on Super Microcomputer Inc. with an exercise price of $50. This carries a notional value of negative $1.66 million and currently represents a liability of $17,400. And they have Super Microcomputer Inc. swap contracts with a total notional amount of over $2.3 million. These swaps are currently showing an unrealized appreciation of $176,015, suggesting profitable leverage positions on Super Microcomputer's stock. Now, let's look at the balance sheet across all these funds combined as of the 30th of September 2025. For the Defiance Enhanced Long Vol ETF, their net assets were about $3.37 million. For the AMD ETF, it was $911,000. The Ethereum ETF had $2.54 million. The HIMS ETF had $3.73 million. The HOOD ETF had $1.99 million. The MSTR ETF was the behemoth with $73 million. The The PLTR ETF had $1.51 million, and the SMCI ETF had $1.7 million. When we look at the statements of operations, we see that most of these funds introduced quite recently in 2025 are still in the phase of accounting for their very short operational periods. For example, the Defiance Enhanced Long Vol ETF, which started operations in August 2025, is showing a net investment loss of $502,274 from operations. Similarly, the AMD ETF had a net decrease of $52,245, and the Ethereum ETF had a net decrease of $171,002. However, some of the other funds did show incredible gains. The MSTF, which started in May 2025, experienced a net decrease in net assets from operations of over $56 million. This might sound alarming, but it is important to remember the massive scale of their bets in MicroStrategy and the volatility of the underlying asset. The fund's total return was an astounding negative 41.08%, and the NAV per S-hair dropped from $20 to $8.87. This highlights the extreme risk associated with these leveraged strategies, especially when tied to volatile assets like MicroStrategy, which itself is heavily influenced by Bitcoin's price action. On the other hand, the HIMI ETF showed a remarkable total return of 33.12%, with its net asset value per S-hair increasing from $20 to $24.85. The HUI ETF also delivered a strong total return of 38.96%, with its net asset value per S-hair climbing from $20 to $26.51. These positive returns are likely driven by successful leverage positions in Robinhood and HIMS and HERS Health, demonstrating that these strategies can indeed work when the market moves favorably. The notes to these financial statements go into deep detail about the risks involved. They mention derivatives risk, futures contract risk, options contract risk, and swap agreement risk. For funds focused on specific stocks like AMD, Hawaii Miz, HUD PLTR, and SMCI, you can bet they're heavily exposed to the risks of those individual companies. This includes indirect investment risks, trading risks, and performance risks. They essentially put all their eggs in one basket, and if that basket has a problem, the fund suffers. For the Ethereum ETF, they also detailed the significant risks associated with Ether and the underlying ETFs that hold Ether derivatives, including regulatory uncertainty and the volatile nature of digital assets. Looking at advisory fees, the Defiance ETFs have a unified fee structure where the investment advisor, Tidal Investments LLC, is responsible for paying most of the fund's operational expenses out of that fee. For most of these ETFs, the advisory fee is 1.49% of average daily net assets. However, for the MST ETF, the advisor has contractually agreed to reduce its fee to 1.18% until at least the 31st of August 2026, which is a good sign that they are trying to manage costs for investors on that particular fund. This unified fee structure is a key takeaway. It means that investors are paying one flat fee, and out of that fee, the fund manager covers things like transfer agency, custody, and administration costs. This simplifies things for the investor, but it also means the manager has a strong incentive to keep overall expenses low. They also included a note about recent market events highlighting volatility due to inflation, interest rate changes, recession fears, trade tensions, and geopolitical conflicts. This is basically them saying, hey, the world is a bit crazy right now, and that affects our investments too. It's a standard disclaimer, but important to acknowledge given the volatile nature of their strategies. So what is the big story here? Defiance ETFs, through these various funds, are employing extremely aggressive strategies. They are using a lot of leverage through derivatives like options and swaps, often focusing on single stocks or specific market indicators. This means massive potential gains if their highly concentrated bets pay off, but also equally massive potential losses if they go the wrong way. The MST ETF's performance is a stark reminder of this, while some funds like HIMI and HUI have shown very impressive returns. Likely due to favourable market movements in their underlying assets, the risks are undeniable. Their direction seems to be all in on leveraged bets on specific growth stocks and volatile market indicators. The strengths lie in their potential for outsized returns in favourable market conditions, and the simplified fee structure. However, the weaknesses are glaring. Extreme concentration risk, amplified losses due to leverage, and the constant drain of high financing costs on swap contracts. The biggest risks are clearly tied to the performance of the underlying companies and the inherent volatility of the derivatives they are using. For example, if MicroStrategy's Bitcoin holdings falter, the MSTF could see further significant declines. Overall, these aren't funds for the faint of heart. They are designed for sophisticated investors who understand and can tolerate very high levels of risk. The success of these funds is highly dependent on precise market timing and the correct forecasting of future movements in highly volatile underlyings. Alright, that is our deep dive into Defiance ETF's latest filing. What is your take on these leveraged, concentrated strategies? Are they genius or just gambling? Drop your thoughts in the comments below. If this analysis provided value, please hit that like button. It really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community link in the description for more in-depth discussions and analysis. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.